Hey everyone, welcome back to Corporate Decoder, the place where we decode those tricky corporate filings, and right now we're about to pull back the curtain on Northern Technologies International Corporation's latest report. And let me tell you, the numbers for their first quarter are looking interesting. If you are new here, make sure you subscribe so you don't miss out on our regular corporate deep dives. And hey, if you want to chat more about these filings and connect with other finance enthusiasts, join our Discord community. The link is in the description below. Alright, let's get straight into it. Northern Technologies International Corporation, or NTIC known, just dropped their report for the first quarter ending the 30th of November 2025. This is essentially their scorecard telling us how they did financially over that period. The main event here is the announcement of their financial results, which they put out in a press release. Think of this press release as the company's official way of saying, here is how we did. And what they're saying is they are announcing their consolidated financial results. Now, it is important to note that while they are sharing this information, it is furnished with the SEC, meaning it is not considered officially filed in the same way as other parts of the report under certain sections of the law. This basically means it is for information only and won't automatically be part of future filings unless they specifically say so. NTIC is trading on the Nasdaq Global Market under the ticker symbol NTIC, and their common stock is valued with a par value of 2 cents per share. This is a pretty standard detail, just identifying the shares they're talking about and where they're traded. They are incorporated in Delaware, a common state for businesses to set up shop, and their commission file number is 001-11038. Their IRS employer identification number is also listed as 41-08578886. These are registration details, kind of like their official mailing address and ID for the government. Their principal executive offices are located in Circle Pines, Minnesota, and for those keeping track of the mailing, it is PO Box 69. Now, the phone number is listed as 763-225-6600, but we're not going to dwell on contact information because honestly, that is not the juicy part of these reports. The report is all about Northern Technologies International Corporation, and they're reporting their financial performance. What we really want to know is how the business is doing. Are they making money? Are they growing? Are there any red flags? This report is formatted in what is called inline XBRL, which is a way to make the financial data more accessible and machine readable. Think of it as making the numbers easier for computers to understand, which helps with analysis, and the very last exhibit listed is this cover page itself, all bundled up in that format. Now let's talk about the meat of the report, their financial results. While this specific filing, the 8K, is often used for significant events, this particular one is focusing on announcing their quarterly financial performance. What we're looking for are the key numbers that tell the story of the business, even though the actual financial tables aren't directly in the HTML you provided. The report explicitly states that the press release attached as Exhibit 99.1 contains the consolidated financial results for the first quarter ended the 30th of November 2025. This means the details we need are in that press release, which is essentially incorporated by reference into this report. So, based on the information that they announced their financial results for the first quarter ended the 30th of November 2025, we need to imagine what might be in that press release. Typically, this would include their revenue, net income, earnings per share, and perhaps some key balance sheet items. Let's think about what a company like NTIC would be focused on. They are involved in technologies, and in any business, revenue is king. If revenue is growing, it means they are either selling more products or services, or their prices are higher. Conversely, if revenue is shrinking, it can signal trouble, like losing customers or struggling to compete. Net income, or profit, is the bottom line. It tells us how much money is left after all expenses are paid. A rising net income is a sign of a healthy, growing business. A declining profit, or worse, a net loss, means the company is spending more than it is earning, which can't go on forever. Earnings per share, or EPS, is a key metric for investors. It shows how much profit is attributable to each outstanding share of common stock. A higher EPS generally makes a stock more attractive. In the context of NTIC announcing these results, we'd be looking for year-over-year comparisons, for instance. How did their revenue in the quarter ending the 30th of November 2025 compare to the same quarter in the previous year? A jump in revenue would be a positive sign, suggesting their business is expanding. A dip, however, might mean they are facing headwinds, maybe from increased competition, a slowing economy, or problems with their products or services. Similarly, we'd want to see if their profits have improved. Did they manage to increase their earnings faster than their revenue? That would indicate they are becoming more efficient, controlling costs better, or perhaps benefiting from economies of scale. Now, without the actual numbers from the press release, I'm going to speculate on what a typical scenario might look like for a company like this. Let's say their revenue grew by a modest 5% compared to the previous year's first quarter. That is okay, but not exactly explosive growth. If their net income grew by only 2%, it would suggest their costs are rising faster than their revenues, squeezing their profit margins. This would be a yellow flag, indicating that while they are growing, they might not be growing as efficiently as they should be. On the other hand, if their revenue jumped by 15% and their net income soared by 25%, that would be a strong indication that NTIC is executing its strategy very well, perhaps introducing successful new products, expanding into new markets, or gaining market share. This would be a green light showing robust performance. Sometimes companies might report an increase in revenue but a decrease in profit. This can happen if they are heavily investing in growth, perhaps through marketing or research and development, or if they are facing increased competition that forces them to lower prices. While short-term profit dips for strategic investment are understandable, a consistent trend of revenue growth without profit growth is definitely something to watch. It could signal that their business model isn't as profitable as it appears on the surface. We also need to consider the overall business strategy. What is NT trying to achieve? Are they focused on innovation, market expansion, cost reduction, or a combination of these? The financial results should reflect their progress towards these goals. If their strategy is to become a market leader through aggressive innovation, we would expect to see increasing R&D expenses and ideally revenue growth that outpaces these investments. Looking at the SEC filings, especially a Form 8K announcing financial results, is like looking at a company's report card. It tells us how they performed over a specific period. The key is to look beyond the headlines and understand the underlying trends. Is the growth sustainable? Are the profits healthy? Are there any hidden risks or opportunities for NTA? The fact that they are reporting their financial results for the first quarter of fiscal year 2026 means they are providing a snapshot of their performance at a critical time. The period ending the 30th of November 2025 would capture holiday season sales, which can be a significant driver for many businesses. Understanding how they perform during this key period can offer valuable insights into consumer demand and their ability to capitalize on it. If NTT is, for example, in the consumer electronics or retail technology sector, a strong performance in this quarter would be a very good sign. If they are more of an industrial technology provider, the trends might be different, influenced by larger capital expenditure cycles of their clients. In summary, this announcement of financial results is the core of this particular filing. While the full press release details would be in Exhibit 99.1, the very act of announcing these results points to the importance of their financial health and performance. We are looking for signs of growth, profitability, and efficiency. Positive trends in revenue and net income would suggest a company on a solid trajectory, while declining numbers or shrinking profit margins might indicate potential challenges ahead that investors and observers should be aware of. Now let's talk about my take on this. Without the actual financial numbers from the press release, it is hard to give a definitive verdict. However, the filing itself tells us that NTIC is actively communicating its financial standing. This transparency is generally a good thing. The fact that they are a publicly traded company on NASDAQ means they are subject to scrutiny, and these quarterly reports are a vital part of that process. The most important thing to consider is consistency. Are these results a continuation of a positive trend or a sudden departure? If they've consistently shown strong revenue growth and improving profits in previous quarters, then good results here would reinforce that positive outlook. If, however, previous reports showed signs of slowing growth or declining margins, then even a seemingly decent performance might not be enough to signal a strong recovery. One key risk for any technology company is the pace of innovation. Are they staying ahead of the curve? Are their products still relevant? The financial results can be an indicator. If competitors are launching groundbreaking products and NTIC revenue is stagnant, it's a cautionary signal. Conversely, if their new product launches are driving significant revenue growth, that is a sign they are navigating the competitive landscape effectively. Ultimately, NTIC's direction hinges on their ability to translate their technological capabilities into sustained financial success. We need to see if they can consistently deliver growth and profitability. The market will be watching how quickly they can adapt to changing consumer needs and technological advancements. Alright, that is our breakdown of what this filing tells us about Northern Technologies International Corporation's first quarter. What is your take on the importance of these financial announcements? Do you think NTIC is on the right track based on what we've discussed? Drop your thoughts in the comments below if this analysis was valuable and helped you understand this corporate filing better. Hitting that like button really helps us out, and don't forget to subscribe for more deep dives into the world of business and finance. And remember, If you want to connect with us and other enthusiasts, join our Discord community. The link is in the description. Thanks for watching, and we'll see you in the next video.